cryptocurrency is and how we can change the world by using cryptocurrency. The One Academy is the heart of our company. Cryptocurrency is not an easy product. It's a very innovative product based on technology and based on very, very complex concepts. For us to be part of this financial revolution, to be part of cryptocurrency and of a community, we need to understand exactly what we do and what we talk about. And this is why we have the One Academy. The One Academy provides you with concepts, provides you with explanation on cryptocurrency and on the financial world. I would encourage everybody to join the courses, to do the certificates, and to understand thoroughly how to use cryptocurrency, what cryptocurrency is, and how we can change the world by using cryptocurrency. One Academy. Learn today, lead tomorrow.
Blessed good morning.
And then we need to use this. We have an analog government in a digital 21st century.
A blessed good morning and good day to everyone from the Caribbean and around the rest of the world. Thank you for being on the call. My name is Maureen Brown and I'm from Barbados. I'm your host today. Just a reminder, as Dr. Ruja just said, we are learning today so we can lead tomorrow. What is One Academy? It's an innovative e-learning platform covering a broad range of financial topics, including trading, the stock exchange, cryptocurrency, financial analysis, asset management, and more. Our mission is to provide our students with the guidance and educational materials they need to achieve financial literacy. One Academy was developed by finance experts and academics. It's highly structured and easy to understand. You learn at your own pace and can be part of the future of global finance. And again, our founder, Dr. Ruja, just reminded us that on the video. We will be continuing with level 1 today, and our intention is to give you a unique sense of understanding of straightforward facts that you can use immediately to enhance your daily lives as well as promote our core product, One Academy. Remember, it's an interactive session, so please put your questions and comments in the chat box. Also, we will allow 1 or 2 contributions at the end of the discussion unless otherwise stated. I encourage you to take copious notes to assist you in your quest to become certified, knowledgeable, and wise investors. Just before I hand the mic to Mr. Pereira, I want to play a clip, compliments of Lisa Green.
We need to use this. We have an analog government in a digital 21st century. Cannot work.
Another question, playing right into what we were just discussing. What role do you see cryptocurrencies playing in the economy? Are we looking into using this as a means of assisting Barbados out of debt?
Well, the first thing we need to do is to be able to create a regulatory framework to allow us to determine how best we're going to interact with cryptocurrencies. And there's a lot of division on it, but what we have settled on in the manifesto is that we will create a regulatory sandbox to allow us to be able to allow those who want to innovate to have that space where innovation is possible. With respect to the actual Barbados dollar, not cryptocurrencies, we do recognize that we do need to go digital, and we will be working with some of the entities to be able to make it happen, because the way how people treat to money and deal with money has changed. And if Barbados is going to make itself that country in the world which wants to attract people, then we have to innovate. So moving to a digital currency will be early on. With respect to the cryptocurrencies, there are aspects of it that we're going to still have to discuss, but we're going to create the regulatory framework through the sandbox.
Thank you, Mr. Pereira, for playing that piece for me. Interesting enough, I wanted One Academites, I wanted us to have a little discussion, Larry and I, on that comment that our opposition leader, and we're leading up to elections on Thursday. So that's one of the bright things that she would want to do if she wins the seat. And I thought it was an interesting clip. And I actually, when I heard the clip last night on the chat, I was like, how did Lisa get that done? only to find out that Lisa actually sent that question in. So that was interesting that she was able to get them to answer at the same time. So Larry, what do you think about what was said?
Well, Maureen, that's a very interesting clip. Of course, good morning to you. And of course, good morning to all the One Academites, wherever you are in this big blue planet we call Earth. Indeed, we can actually assume many, many different things out of that clip. But what I do gather from this is that that there is a conversation going on in Barbados as it relates to cryptocurrency. And what I see is opportunity. And it really is an opportunity for us in the community to now continue to go out there and to educate. It also proves conclusively that the One Academy, the training, the materials that we have received thus far is really critical for us taking this discussion forward.
Thank you. I thought it was very interesting as well. And I did notice the division that she made between the digital money, Barbados digital dollar, and cryptocurrency. So she didn't get them mixed up. I noticed she had them separated, and she's open to talk. So I thought that was an interesting clip, and I just wanted to share it with my fellow One Academites. Over to you, Larry.
Yes, good morning once again, One Academites. Of course, it's Monday the 21st of May, 2018, and we are continuing assiduously with our One Academy discussion. We would have spoken a lot about the 4 asset classes last week. Just want to give you a very, very quick recap. And we talked a little bit about commodities, cash and money equivalents, equities, which includes stocks and bonds, and of course, the regular investments, which give you what people know known as fixed income investments. All right, there's a lot of information out there as it relates to commodities, and it's important for us to understand in our One Academy discussion what really is this whole concept of commodities. Of course, many of us may not be sure what a commodity is. A commodity, number one, are components that really add value in the production of goods and services, right? So it has tremendous opportunity as a trader. And of course, it is generally considered a safe asset class from the perspective that it is almost inflation proof, because it is really value that is generally appreciating. Of course, oil, corn, wheat, gold, silver, palladium, all of those things are classified as commodities. But most importantly, we must remember that commodities has 3 categories that is subdivided. Number one, we have what we will call the agricultural commodities. Of course, many of you would be enjoying your morning coffee or your tea this morning. That's part of the commodities. It's an agricultural commodity because someone would have actually produced the coffee, the cocoa, etc., the tea, all right, and all of those are tradable on the stock exchange. So then it is profitable. Then we have the energy category, which we deal with oil, natural gas, something by the name of RBOB gasoline. That's another word for unleaded gasoline. And of course, heating oil. All those are main components that go into the final production of a product or products. Last but not least, we have the metals classification, which deals with gold and copper, silver and palladium. And all of those, as you know, have straight intrinsic value. All right. So really and truly, when you're dealing with commodities, commodities have 3 categories that is normally dealt with on the stock exchange. Of course, we dealt with a little bit about cash and money equivalents. And cash equivalents has a lot to do with currency, coins, checks that you would have received but not yet deposited into your checking accounts and so on. All right, include savings accounts, money market accounts, and short-term, highly liquid investments with a maturity of 3 months or less at the time of purchase. Another important part of the assets are equities. Equities would include stocks and bonds, stocks or shares of a stock. As you know, that represents ownership or interest in a corporation. It does not mean that you actually own the company, nor do you have management rights or your say in terms of running the company, but you are in fact a shareholder, which is a piece of the pie as it relates to the economics of the company. Then we have bonds. A lot of talk today, especially in Trinidad and Tobago, about bonds and Republic Bank shares and all of these things. They are also a form of long-term debt in which the issuing corporation, and sometimes the issuing corporation can be the government, to pay the principal amount at a specific date. So all those are very important points. And of course, the regular rate of returns, investments, which would include a combination of stocks, bonds, mutual funds, etc., which tends to give you that rate of return. I think someone has their mic unmuted. Can you just please mute your mic? So this morning, we are going to continue along the One Academy training in our manual level 1. There's so much information that you can actually use in your One Academy training. I trust everyone is seeing my screen here. Maureen, can you see my screen?
Yes, I am.
Okay. Now, we alluded to the point of the modern portfolio theory last week, and I went ahead and I looked at the 4 asset classes, which we just discussed a while ago. But let's look at very quickly what the modern portfolio theory establishes, because the modern portfolio theory establishes a very important point when we're dealing with investments, when we're dealing with the structuring of a portfolio. As you know, your portfolio should have 4 major components. Number 1, land. The acquisition of land, very important as it relates to your diversification drive to allow you the freedom and the flexibility to be able to weather any financial storm. Then next we have commodities, if you would put it this way, the metals classification commodities, which is gold and silver, which offers what we will call hedging. Hedging is a form of protection that deals with the fluctuations of values, especially in terms of inflationary. So it really is important to have gold and in fact silver as a classification for protection. And last but not least, the new emerging class, which came out since 2009, we now have cryptocurrencies, which now represent a significant part of the trading landscape in terms of what people are in fact doing with cryptocurrency and what it can do. Of course, we're beginning to hear more and more about cryptocurrency. Of course, we have many of our Caribbean brothers that are basically taking a look at it. Of course, Barbados is actually opening up the conversation, and hats off to Barbados, because I think it's time that this discussion must go forward. It is like the internet. You can't stop it. You possibly can regulate it, but you can't stop it. It is a freight train moving forward. It is like a rocket ship. It's not going to go away. So we need to embrace the technology. We need to understand what it is. So moving back to MPT, right? What it really says is this, and if you look at the manual carefully, it's very, very detailed in their explanation. And if I look at this paragraph, it says that for these speculators, it is recommended to invest in assets in shorter time horizons. So if you are, in fact, creating a portfolio, which we discussed a few moments ago, your portfolio, when there is a consideration for these types of speculatory assets, it should be predominantly in a short-term category. When I say short-term, I am actually referring to predominantly bonds. Bonds are definitely one of the classifications that you have to pay attention to. Now, bonds does have unique opportunities when you're dealing with corporations. But if you're dealing with government bonds, which acts as the corporation, what you must bear in mind is that most bonds are really longer termed. So the longer you keep your bonds, especially government bonds, you are in fact absorbing a tremendous amount of risk, which is systemic in nature. And systemic risk says that there are factors that are going to play out in that asset that is beyond your control. And what do I really mean by factors beyond your control? Economic risk, exchange risk in particular. So if you're assuming government bonds over a 10-year period, you are in fact setting yourself up for an increased amount of risk. So you must be mindful of bonds that are over, I would say, a 5-7 year period, simply because you cannot predict the level of risk that's going to happen from an economy, and by extension, the exchange risk in cases of a country's rate of exchange. That's also very important. So there we have it. In our manual, it's actually saying that we need to pay attention. So the idea, One Academites, is to benefit from the price fluctuations and to avoid the long-term effects of inflation. Of course, we already understood what inflation is. Inflation robs you of your purchasing power. The reason why we invest in many of these classifications of assets is to benefit from what we call compound interest. If your country's inflation rate, and I'll just use an example, is 5%, and your savings account is paying you 1% or less, you recognize from that observation that it is not going to pay off in the long run. So that is the reason, and we made that distinction 2 weeks back when we discussed what is currency and what is money. Money is, by definition, One Academites, anything that increases in value over time. And we use a litmus test. If we use a commodity, a metals commodity as gold, and we value this over the last 45 years, we'd realize that the cost of gold has gone up over the last 45 years. So over the last 45 years, you would have been able to move from buying 5 loaves of bread back in 1971, when the US dollar was then pegged to the US gold standard, but no longer is. But if you continue to keep gold in your hand, not ETFs, not paper gold derivatives, we are talking about hardcore gold in particular, you'd recognize that instead of being able to buy 5 loaves of bread, you would now be able to buy at least 35 loaves of bread, depending on where you live in the Caribbean region and further afield. So what does that mean? It meant that there was an increase. According to the One Academy manual, you cannot make a comparison of value when you're dealing with fiat currency. Value has to be equated in a commodity. A commodity is something that is inflation proof. You cannot use an instrument, in this case, a currency instrument, to measure value, since it is depleting over time due to the effects of inflation, which is what we are talking about here. Now, if you look at the US dollar now, which roughly has 2 cents purchasing power, you realize that if you look at the United States dollar over the last 45 years, you'd recognize, can it buy a loaf of bread? So when you really measure, right, goods and services, the acquisition of goods and services in the mainstream of value as per se, you realize that there is a startling difference between what is considered money, or what is money rather, One Academites, as opposed to what is currency. And that is the distinctive understanding that we all must have moving forward in these discussions. We must understand clearly that what you have in your pocket is not money. What you have in your pocket is fiat. It is currency. If you go to the banks anywhere in the world, you will see the currency rates that are being traded on the FX market today. That is currency. The bank makes a distinction between currency. And of course, we need to understand that what we need to do as investors is to set things in play where we acquire assets which are in fact going to benefit us and give us what we will call the compound effect. So the compound effect is very important, because the compound effect is the only way in which you can actually acquire a very, very good return moving forward. I'm going to share with you, this is about a 7-minute video with Anthony Robbins, who really discusses to some extent really the importance of what we just spoke about. And I want you really to take this video in, then I'm going to come back with the discussion.
And you're full of debt from college, and you think,
back to beginning.
see you guys again.
First of all, I want to wish you a happy birthday, although I don't know what day to wish you a happy birthday. When is your birthday?
Back to beginning.
Good to see you guys again.
First of all, I want to wish you a happy birthday, although I don't know what day to wish you a happy birthday. When is your birthday?
Well, February 29th, so it's sometime between midnight and 12:01 tomorrow, I guess, something like that. So, no, when I'm 84, I'll be 21. It's a good deal. I'm 14 right now.
I love that. That is awesome.
14 birthdays.
Happy somewhat birthday.
Thank you.
Anyway, I started reading the book,
Yes.
and it's amazing because I think a lot of us worry. You
Yes.
know, we have our money in the market.
Yeah.
What happens, you know, like right now, I mean, the market's doing really well.
Yes.
Do we take our money out now and just say, okay, that's it, we did okay? What do we do, Tony?
That's why I wrote this book. I wrote this book because I wanted to protect people, because a crash is coming. Now, whether it's 6 months from now, 12 months, 36 months, no one knows. Warren Buffett said, if you listen to market forecasters, their only purpose is to make, people that tell fortunes look good, because they just don't know what's going on. So, but what I did try to prove in this book is what the facts are. So here's a couple things you should know. Number one, there's a new high on average every month. Most people have no clue. So you hear, oh, it broke records, it broke records. We're in a situation right now that's very artificial. It's a situation where the feds around the world have been printing money. So nobody knows what's going to happen. There's this tremendous fear that's in the marketplace. So what I wanted to show people was, look, when the crash comes, first of all, a correction comes every year. I don't know if you remember last January, the world was ending. The market lost $2 trillion in January. It was the worst January ever.
Yes, I remember that.
And we ended the year a total record-breaking year again. So obviously there are going to be corrections. They happen every year since 1900. The average one is 2 months long, and it costs you 14% if you sell. But if you don't sell, you're fine. There's a bear market about every 5 years. We've gone 8 years without one. That's why I wrote this book, because I want to show you how to protect yourself when that bear comes, but more importantly, how to take advantage of it, because it is the greatest opportunity in your life to leapfrog from where you are to where you want to be. Let me explain why. If I told you, if your favorite car was, let's say, young man, what do you like? And you say, I love Ferraris. They're on sale for 50% off. You'd be pretty excited. The stock market's the only place when things go on sale for 50% off where everybody panics. See, Warren Buffett looks at it and goes, this is the greatest opportunity of my life. He tells everybody to do this, but everybody else panics. What you need to know is that every bear market that's ever come, they average a year. They usually cost 33%, but if you don't sell, they don't cost you anything. And in 2 centuries of American history, please hear me if you're listening at home, in 2 centuries, every single bear market was followed by a bull market. Everybody remembers 2008. Oh my God, the market dropped 35, 40, 50% at peak to trough. It went up 69% the next 12 months.
What happens if you don't have the money to invest in the market? I mean, you got a few bucks, you put it in the bank. How much should you invest in the market? How can you get your foot in the door?
Well, all the answers I'm giving you, by the way, are not my answers. I interviewed 50 of the smartest financial people in the world, from Warren Buffett to Ray Dalio to Carl Icahn. But the answer to your question is, you have to become an owner and not just a consumer. If you own an iPhone and you don't own Apple, and not just Apple, but American business, you're making a giant mistake. Now, people say, but I have no money. I think I shared with you when I was on before, there's one of my favorite examples is a man who grew up in the 1950s, worked for UPS. His name's Theodore Johnson, true story. He never made more than $14,000 a year, but he retired with $70 million, and he gave away $35 million while he was still alive. How is that possible? He understood the power of compounding. A friend of his said, I'm going to put a 20% tax on you. And he goes, I can't live on less than $14,000 a year. He said, listen to me. If the government passed another tax of 20% more, you'd scream, you'd yell, you'd complain, and you'd pay it. And you'd adjust to it. He said, this will make you wealthy. So what people have to do is take 5 or 10 or 15 or 20, you build it through time, and you got to put it aside and have it automated. So you don't see it, it goes into an investment account. Then where to put it, this book shows you by walking through those elements. But what I want people to know is, if you're a millennial and you're full of debt from college and you think you'll never get out, this will show you exactly how to get out. And the best time to get out is when things break down, because that's when the opportunity is going to be there. If you're a baby boomer and you didn't get started until it was too late, it's not too late when the crash comes. That's the ironic piece. And here's one more thing. You think about timing. Like right now you're saying, should I get out of the market?
Yeah, right.
So let me answer that. Charles Schwab and JP Morgan did a 20-year study. They said in the last 20 years, the S&P 500, the market, the index, it's gone up 8.2% per year, which means you're doubling your money, like every 9 years, doing pretty damn well. But here's the challenge. If in 20 years you were out of the market on the 10 best trading days, in 20 years, then your value went from 8% to 4.5, cut it in half.
Wow.
If you missed 20 of the best trading days, just 1 day a year, because you thought, oh, I want to get out of the market. If you miss those 20 days, you make 2%. If you miss the top 30 days in 20 years, 1.5 days, you lose money.
So keep your
The most dangerous thing is not to be in the market.
right. Keep it and just ride it out.
Yes,
right?
and it isn't just the market, right? You need a series of investments to diversify. Nobody should put all their money in the market. But when you start seeing how this works, like people say, well, what if I go in tomorrow and the market crashes? Well, Schwab did a study. They found, what if you bought on the perfect day of the year, when the market crashed and you bought that day, the lowest level? Or what if you bought on the worst day, the peak of the market, and it crashes the next day? What if you, so if you bought it perfectly, if you bought it the worst, What if you dollar cost average? You just every month you spend the same amount, whatever stocks are, so it averages the price. Or you go in cash, which is what so many people are doing because they're afraid. Who lost? Cash by 50%. They had 50% less money. Cash is going nowhere. Who won? Yeah, the person who was there on the ideal day. But the person who got on the worst day after 15 years was only behind $10,000. So it's hard, it's counterintuitive, but you want to be in the market. And then when the market does crash, instead of selling, which is what people do, you want to stay. My partner in writing this book is Peter Mallouk. Peter created a company called Creative Planning. He's been rated the #1 financial advisor by Barron's 3 years in a row. No one's done that in history. 2 years in a row by CNBC, and this year Forbes did their first list and he's #1 on their list. So he's my partner. I'm on his board of directors. So if people go do business with him, they should know that I'm with that organization, I benefit. But I partnered with him because in 2008, he took his clients, he had no advertising. He went from a $500 million business, sounds big, to $2 billion in the middle of the crunch time. And the reason is everybody flooded to him because he told people, here's what will happen when the bear market comes, and we're going to clean up. He told them in advance, I don't know when it's going to come, but I'll show you what we're going to do. It'll be the best time of your life. And he delivered. So they all brought him new clients. Now he's $23 billion in assets, right?
So you heard it, guys. I'm hoping that you paid attention to what Anthony Robbins basically said. Compound interest is the seventh wonder of the world. And that's really what you're doing. In One Academy, in the morning time, you're learning how to play this game of compound interest, how to use the various assets, begin the process of understanding. Of course, you're not going to understand everything on a One Academy discussion, but without the One Academy discussion, you would be clueless. So you understand the importance of why you need to be on these calls and why you need more people to be on these calls, because we're going to be exploring this compound interest moving forward, because it is so important that you understand for the creation of your own portfolio that you need to understand what it is. You really need to understand how to use compound interest. Now, a case in point, we're all generally part of the One Life community. When you purchase a package, what you're in fact doing is that you're acquiring the education, #1, which is what we're discussing here, and much more. But also at the end of the day, you're also learning through the unique opportunity that Dr. Ruja has structured in the acquisition of the OneCoin cryptocurrency to really begin that process of what we will call compound interest. And hence the reason why you need to really understand the dynamics of this financial education so you can go forward and create this discussion. Because at the end of the day, nobody here on this call are salespeople. We are not selling. We are not trying to convince you to buy a package. Well, I most certainly am not. What I'm in fact doing is that we are educators. Yes, write that down on your notepad this morning, One Academites. We are educators. We are basically sharing information with you on what is taking place right now. And that's why everybody has to hear this information. That's why we need to listen. We need to go out there, support the regular flagship meetings wherever it is in your world. You need to go out there and support, but most importantly, you need to spend some time. Everybody has 186,400 seconds in a day. Yes, believe it or not, if you work it out, we all have 186,400 seconds in a day. What does that mean? It means it's a moving river. You're not going to go back to the same place yesterday, today. We are always moving forward. My question to you is, One Academites, how are you spending your time? Because if you're not spending your time wisely, if you're spending your time wasting your time on Facebook and social media and a lot of stuff that doesn't add value in your life, or by extension watching TV or doing a number of things in what we call non-income producing activity, you are going to end up broke, even though you may have purchased a package and even though the value of the coin goes up. So hence the reason why we have to have this discussion in the morning to bring to the table what needs to be done. Because this whole thing about cryptocurrency is moving forward and we need to be part of it. You're part of it, but it's not about just having asset appreciation come at the ending of the year into 2019. Asset appreciation will do you no justice if you don't understand what it is, meaning how do you use this asset appreciation to do what? Because if you keep thinking as a consumer, if you keep thinking as an employee, as Robert Kiyosaki said on the left side of the quadrant, you are going to still end up broke, even though you may have been in the right place at the right time. So being in the right place at the right time is important, but at the same time, you have to acquire the skills. And through this One Academy, you'll be able to do this. So when you're really looking at this educated guess rather than a shot in the dark, it's important that you understand that if we're dealing with assets, we must be dealing with a reasonable time frame. We must understand risk. Risk is your friend. Of course, I spoke about this many months ago when I would have said that your trend is your friend until the end. And of course, in the video that you would have just seen with Tony Robbins, you know, many people sell when they're supposed to buy and many people buy when they're supposed to sell because we're driven by emotions and we need to regulate these emotions. Now, I'm not trying to indoctrinate you into FX trading. That's not the issue. The issue is you need to be educated to understand what you need to do and not to follow the crowd because everybody is buying whatever shares in Republic Bank or wherever or whenever. The thing is you need to evaluate this. So that's where the education comes in. Of course, I've been going on for quite some time, but I really wanted to engage this conversation over to Maureen. You know, we've been talking a little bit about this. I'm sure you would have your perspective as well.
Yes. It was when you were talking about the bonds, I was thinking to myself, normally when the bonds, because, well, for me, I think they're really safe assets. And, you know, well, people have said that to me long, long ago. And I was thinking, do they ever come shorter than the 5? I was thinking, do they come shorter than the 5-7 years? And then I was thinking, I think you can cash in before, but I'm not quite sure how it works. So I was just wondering, so the bonds are a good thing to use in your portfolio or short-term, you know, short-term horizon thing for them. But I was wondering.
Indeed. Of course, let's say you had some cash right now and you wanted to actually consider whether I should buy bonds. Of course, if you're shopping, you need to find out that first as it relates to what you're buying. But in my opinion, you would fare better buying cryptocurrency, OneCoin cryptocurrency, at least to start with, before buying bonds. It's still predominantly a safer bet. So really and truly, it's all about the education. It's about shifting of this whole thing called paradigms so that we could really understand. So this morning, we talked a little bit about the MPT and the prescription of caution in the process of investing. And the prescription of caution in investing says that it is recommended to invest in assets in shorter time horizons. So when you're going shopping for for assets, you need to be mindful of that as your number one prerogative, apart from all the other things that you're probably going to be coerced into buying, including insurance as well. So you really need to benefit from that investment. So the idea here, according to One Academy training, is to benefit from the price fluctuations and to avoid the long-term effects of inflation. At the end of the day, you're always battling against inflation. Remember, inflation is the loss of purchasing power of your dollar. Because when you're investing, you're literally investing in fiat money. So you will always have to deal with the effects of inflation. So when you're dealing with shorter time horizons, you are able to more navigate the choppy waters of inflation. All right. So it's very important that we understand this. This is very important, and I wanted to spend some time today and give you the validation as it relates to how you can do this. And in the last paragraph of chapter 1 of One Academy, it says that you may have other priorities than learning how to speculate on the market or how to establish a balanced and dedicated portfolio of assets, or probably feel secure to do the investing on your own. In this case, there is at least one option on your disposal. You can turn to a professional. Of course, the first step is this should be how to calculate your expenses, of course. And since hiring a manager might be a costly way of putting your portfolio in order. Yes, you can hire someone, but if you're hiring someone who is a professional in doing this, they're looking at you as a number, as a statistic. It's not important whether you lose money as far as they are concerned. So you still need to pay attention to what you're doing. So in other words, it's MYOB. You got to mind your own business. And in order to mind your own business, One Academites, you have to stay connected, you have to stay informed, you have to be educated. Because if you're not educated in this financial circle, you are going to lose because you are following the crowd. So this takes me to the end of today's discussion with the One Academy. We're going to continue tomorrow on a number of things. We got a lot of interesting things moving forward. We're talking about the asset classes. We already did that last week. But what we'll be discussing moving forward is about fractional reserve and, of course, the effects of using other types of commodities in terms of resisting inflation and how you can really capitalize on the seventh wonder of the world, which is compound interest. That is the secret to creating wealth, compound interest. That's my final closing marks. Maureen, it's back over to you.
Thank you, Larry. That was quite interesting information. Some of the stuff I picked up when you were talking earlier is that inflation robs us of our purchasing power. Money is anything that increases in value over time. Value has to be equated in a commodity because commodities are inflation proof. And that I thought what Mr. Robbins said was interesting when he was saying, we say we can't afford to do certain things, but if the government comes and put a tax on us, we quarrel, we complain, but we get it done. So he made the point of saying, whether it's 5%, 10%, 15%, I was thinking he was alluding to the fact that we need to at least be consistent and be disciplined and try to make sure that we're always one of those percentages, somewhere between there 5, 10, 15%, what you could afford. Every time you look to invest, you look to put aside something that you can invest in, in a percentage of your money, and it will work over time. So I thought, and as you talk about the compound effect, I thought that was some of the stuff I needed to say to others.
Indeed.
Yeah. We have 32 people on the call this morning. Welcome, welcome everyone. I want to recognize our Diamond King James and his wife Patrice, who was there early. I'm not seeing her anymore, but I want to recognize them. And I definitely will give him a chance to speak this morning. However, I'll give one or two people opportunity. We were trying to get Joy Severall last week. I'm going to unmute her mic, and I hope she is there so she can chime in this morning. Joy?
Good morning.
Good morning, Joy. How are you this morning?
I am very well, thank you. I came in on time. I was getting a little difficulty, but I got on, and I was excited to hear Tony Robbins, the video with him.
Yes.
And one thing that stood out to me was the fact that one of the persons asked him, what if somebody doesn't have money, what should they do? How should they get on the exchange and to invest in? And he said that people over time, can go to not exact words, but you can save a little, and that makes really sense. That instead of spending all your money, when you get your money, you go to the grocery and you spend and pick up things sometimes that is not very relevant. Save some cash for that particular time, when save from now, so that when there's a crash, you will be able to invest. You will be able to take that opportunity and make the most of it. This struck me very, very, very good,
Yeah.
I knew that to say, but I never understood that you could put aside some money and for that time when the crash comes in,
Yeah.
And I learned this morning. I have taken note of this morning, so I will encourage my family, my friends, to do just that. And because I listened to Warren Buffett, and he said he was happy when there was a crash because he could invest and save more. This is my contribution this morning.
Thank you so much, Joy. I hope everyone still heard, although we were getting a bit of static. But yes, I remember all through coming through level 1 straight to level 5 with Larry saying, we shouldn't panic when there's a crash. We shouldn't panic when there's a crash. So when he said it this morning, I thought that was interesting, that that's the time to purchase. That's not the time to rush out to the market. And I remember Larry saying that all the way through when we were going through the different levels with him. So again, it was reiterated. And then the fact that the Robbins guy, he said that he interviewed, his book was written based on the fact that he interviewed 50, the successor, the people who were very successful in business, financial experts. So, and basically the little nuggets of wisdom he was giving us, or One Academy was also reiterating that as well. Wow. Lisa Green, I want to hear from you this morning.
Good morning, everyone.
Good morning.
Well, for me, I think what has been really confirmed this morning is that we need to position ourselves as it relates to acquiring assets. And through this One Academy, we have been given some awesome tools that we can use and in understanding the risk as we do the acquiring of assets. And we need to just know that there is opportunity in chaos. And Mr. Pereira says it all the time, don't panic when things start to go bad and we think that it's going to actually go downhill, but to hold steady and hold firm and know that there is a silver lining to all the clouds that are coming our way. And as I said, this opportunity in terms of being on the One Academy and learning about the different concepts that we need to understand as we position ourselves in a more changing world. And we are changing in turn as it relates to money. And we just need to understand the changes as we go forward and invest and really acquire those assets and own things like property and get into bonds and savings, because that's what's going to keep us afloat in the next couple of months or even years. So that's all I wanted to share this morning. Thank you.
I'm going to let King James speak now. Thank you so much, Lisa. King James, your mic is unmuted. Go ahead.
Hi, President. Good morning, all. Hope everyone is having a fantastic morning thus far. Well, I see the time is absolutely running away, which is great. Things are happening. Learning has been commencing. I don't want to take too much of your time, but I want to give you guys a quick thought of mine. But it's fascinating, the whole concept of compound interest. I remember Alvin Morton gave the example of the penny in 30 days. It went from 1 cent, if you double it every day, into 5 million. and somebody wants to know if that was in the US. But it doesn't matter what the penny is. The penny is the penny. And once you start to add it up, you'll be amazed if you compound it on a doubling opportunity, it turns into what it turned into. Now, with that being said, I'm hearing a lot of things that make sense. And the inflation, that just don't make sense. I'm hoping everybody's grasping the knowledge and grasping the understanding. There's going to be an article coming out tomorrow in our newsletter. So make sure you guys look out for the newsletter that's coming out tomorrow. Make sure when you get the newsletter, share the newsletter. It's going to give you all updates, highlights, going to give you all the amazing information regarding our Dear Sugar Expo and so forth. And the thought that I shared there, which I'm not going to get into everything, but we started because of the money. I feel it's a fair assumption. Let me speak for me, actually. I started this One Life organization and movement because of the money. However, I'm finishing because of the vision. I heard everybody echoing that now is not that when the markets crash and when there's a crash, everybody don't panic. I want to be able to say that same rules apply for this particular opportunity that we're in. A lot of people are seeing some people go haywire and some persons leaving the company, some persons doing this, doing that. And at a time like this, when we are approaching becoming a little more visible, a little more open, don't panic. If you truly grasp this One Academy education, you will understand that this is supposed to take place. You will fully comprehend that at a time like this, no, you don't understand it because I can't understand it. But all at the same time, you also understand it. What am I saying? I'm saying at a time like this, a lot of people get distracted. A lot of people get delusional. A lot of people make silly errors. Like if this was the current market, they will be selling when now is the time to be buying. Now is the time to be buying in more than ever before into the concept of what the One Academy and One Life and One Coin umbrella gives you. This ecosystem is what we also buy into. So yes, it's okay if you start for the money. I started for the money, but I'm finishing because of the vision. And when I'm finishing, I mean I'm finishing. I'm going right through. I'm carrying on right through. Because friends, this is not the moment to give up. This is the moment to acquire. I'm telling you, I am not asking you, I'm telling you, when Dr. Rouge is teaching us, she's teaching us because of the reset mission. The whole financial will be reset. But now you will have the proper knowledge of what to do, how to do, when to do. So it's not for you to necessarily try to apply now. Because acquiring every one coin possible, it should be your mission. So when that reset button is hit, you know exactly what you have to do, when to do it. Because prices are going to fall on numerous of many of things, friends. And that's when opportunity is going to open for you. So, friends, I really want you guys to just understand, continue with the vision. And if you believe and you grasp this vision, it is easy for you to open your mouth and share with someone else. So like Ms. Joy was saying, she's planning to talk to her family once again, open her mouth to those that she loves. I suggest you do the same, but I pass it on further than that, man. Love thy neighbor. So tell thy neighbor, tell the person you don't even like. Give them the chance to feel themselves. And it's as simple as that. So thank you guys for your time. Looking forward to seeing you tomorrow morning at another appointed time. Looking forward to seeing you tonight at the Center of Excellence for those who can make it. For those who are abroad, plug into whatever local meeting you have home, and let's continue working, friends. Blessings and more blessings.
Thank you, King James. I just want to read one or two of the chats before we go this morning.
You said bye-bye, Marie.
Bye-bye. I just want to read. So Rajesh, hope I got your name right, sorry. He said to us, he asked what is compound interest, and I just want to read what he put there. Compound interest or compounding interest is interest calculated on the initial principal and also on the accumulated interest of previous periods of a deposit or loan. Thought to have originated in the 17th century in Italy, compound interest can be thought of as interest on interest and will make a sum grow at a faster rate than simple interest, which is calculated only on the principal amount. The rate at which compound interest accrues depends on the frequency of compounding. The higher the number of compounding periods, the greater the compound interest. Thus, the amount of compound interest accrued on $100 compounded at 10% annually will be lower than that on $100 compounded at 5% semi-annually over the same time period. So, and then he's telling us that we need to go to Investopedia and we will get lots more information, and he even put it in the chat. Yeah. So I'm thanking everyone this morning, those of you who made the sacrifice to be on the chat and tell others. I'm also thanking everyone for sharing in the chat. So over to you, Larry. We're going out with the One Academy video.
The One Academy is the heart of our company. Cryptocurrency is not an easy product. It's a very innovative product based on technology and based on very, very complex concepts. For us to be part of this financial revolution, to be part of cryptocurrency and of a community, we need to understand exactly what we do and what we talk about. And this is why we have the One Academy. The One Academy provides you with concepts, provides you with explanation on cryptocurrency and on the financial world. I would encourage everybody to join the courses, to do the certificates, and to understand thoroughly how to use cryptocurrency, what cryptocurrency is, and how we can change the world by using cryptocurrency. One Academy. Learn today, lead tomorrow.